President Chirag Doshi, uh, Deepak Bhai, thank you for this opportunity. It was I would not have studied the circulars in this detail and this fast if hadn't been for your opportunity for me to uh, study this and give a lecture. Uh, the circulars are for for benefits of certain trust, as Deepak Bhai pointed out. There will be still issues after we study this circulars. I'll be going slow. There is enough time. There are only two circulars. Both actually create a mess rather than solving any. But however, we are given these circulars, and this hopefully will help at least certain trust which were facing this problem. Uh, Charitable trust, if they want an exemption under section 11 or 11 to 11 and 12, they need to satisfy certain conditions. Now, the sections 11 and 13 are a code in itself. The other sections, like heads of income, do not apply to charitable trust. And therefore, this is a unique case where you have only certain sections which are applicable only to charitable trust. The provisions of section 1112 will not, so there are conditions. The first condition being registration. I've taken this for convenience of understanding certain background. The provisions of section 1112 will not apply to trusts which are not registered under section 12A. Earlier, the registration under 12A was perpetual once the stay was granted unless cancelled by principal commissioner. This led to difficulty. So there was this difficulty where department had to find out defaulters. Therefore, they amended the provisions and they brought in Finance Act 2020, where they brought in that every trust has to re-register with the Income Tax Department, and they would issue the certificate only for 5 years, or in cases where it is a new trust, only for 3 years on a provisional basis. And therefore, this process of registration is very important. Unless you are registered, uh, you will not get the benefit of Section 11. The worst is if you are registered and then you withdraw the registration on the market value of all your assets minus the liabilities linked with it, you will have to pay tax under 115 TD. And therefore, registration is the most important. Now, over the years, you will realize that from 2020, for that reason, 16, 17 onwards, charitable trust has been the favorite topic for the finance minister. Every budget, whether she talks about anything, amendment, any other amendment, there is an amendment to the charitable trust. So there is a constant amendment to the charitable trust. This is it. The second condition is of maintenance of books. The law earlier did not specifically require that the books of accounts of the trust are to be maintained. What was said was the books of accounts would be audited, will have to get it audited by the trust. Uh, it was realized that there is no specific section that the trust should maintain a books of accounts in a specific manner, and therefore to make a stringent provision, they amended the act in Finance Act by Finance Act 22. From assessment year 23-24, they said that the trust will maintain books of accounts in a prescribed format. They followed it up by a notification on 10th August 22 by amending Rule 17AA, prescribing what books of accounts are to be maintained. Trust me, if you read that entire list of uh, Rule 17AA, the books of accounts to be maintained, there are 50 items, more than 50 items, and it is more stringent than what you would do for a company. And one needs to be very careful when auditing a trust because this is compulsory. If you do not maintain the books accounts in the prescribed manner in which they are prescribed, in that case, you lose section 11 exemption for that particular year. So therefore, uh, the books of accounts are required to be maintained in the prescribed form. Coming to the filing of audit report, the trusts are required to get the books of accounts audited if the total receipts are in excess of the amount not chargeable to tax for an individual. So if your receipts are more than 2,50,000 without the deduction under section 11, you are supposed to get your books of accounts audited. Uh, the trust, so the old form was 10B. It was a simple form, a 4-page form. Not much details were required. However, there was a CAG report which was circulated in 2022. which provided that this particular 10B form did not give all the details which are required, and that there was a need to amend this particular form. The government therefore notified new forms 10B and 10BB by notification number 7 of 2023 on 21st February 23. Now, these two forms were uh, really difficult to understand, fill up and understand, because you first had the books of accounts to be maintained, which give you more than 50 items. You then had 10B, which had 49 clauses and 29 schedules. You had 10BB for smaller trust below 5 crores, having 32 clauses and 7 schedules. Now, these were forms which are given only in February 23. You had less than a few months to study this thing. You had to reconcile these various clauses and schedules with the return of income, with the books of accounts. There was a lot of hue and cry. A representation was made by various associations saying that one needs to take a practical view of these things, and you cannot implement this form in the short period provided. However, the government did not oblige, and we had to fill up those forms in the prescribed format within the time given. There was some extension given for 1 month. Besides that, the government did not relent. They required you to fill up these forms. Uh, some of us see this as a great opportunity because it has increased the level of compliance by all trust. Today, operating a trust is practically as good as operating a professional business organization, and you will have to maintain all the books of accounts in the formats which are given. The notification for 10B and 10BB provided that when you are supposed to fill up 10B and when you are supposed to fill up 10BB, it said that there were three clauses given, in which case you were supposed to fill up 10B. The first clause being that any such fund or institution or trust or university or other educational institution, if its receipts exceed rupees 5 crores during the previous year. If there was, the second clause talked about if there was any foreign contribution received during the previous year. Foreign contribution is not defined under the Act. It is defined under the FCRA, Foreign Contribution Regulation Act. And one would have to look at that particular definition of foreign contribution when you look at this particular clause. The third clause was whether he has applied any part of its income outside India during the previous year. If you fall in these three clauses, you are supposed to fill up 10B. In all other cases, you are supposed to fill up 10BB. Before we go ahead, I would like to point out that prior to this new forms being notified, the old form for charitable trust registered under section 12A, 12AB and 12AA was 10B. And for charitable trust which were covered under 1023C, hospitals, schools, educational institutions, which are given complete exemption under 1023C 4, 5, 6, and 6A. These institutions were supposed to fill up Form 10BB. So the criteria was 1023C required filing of 10BB, and the trust covered under 12A registration were supposed to get fill up Form 10B was the old form. Why I'm pointing out this is that because the chartered accountants were used to filing 10B and 10BB, some of us have really not looked at the amendments in proper manner and filled up 10B irrespective of whether I'm falling in 10BB, and filled up 10BB irrespective of the fact that I was covered under 10B. Now, this particular provision of the notification created a lot of confusion when it was applicable. The selecting of form was difficult because definition of foreign contribution was under the FCRA Act. Some of the chartered accountants who were not dealing with FCRA over a period of time had really not looked at that definition, and the time provided to complete the audit and fill up the forms was really short. One of the issues is the interest on foreign contributions received in the bank account of a foreign contribution account would be also treated as foreign contribution. So if I am maintaining now in SBI Delhi a foreign contribution account, and that being a saving account, I earn certain interest on that foreign contribution. That interest was also treated as foreign contribution as per the FCRA law. So therefore, some of the people have filled up 10B if there was interest, no contribution, but there was interest on foreign contribution. The second criteria was the total income of the trust. What is to be include 5 crores. So whether I include corpus donation, whether I don't include corpus donation, uh, according to me, the law was clear that you need to include corpus donation, but there was this confusion because corpus donation was never brought into the income expenditure. It was always taken directly to the balance sheet. So there was some sort of confusion whether that should be included or not. However, the structure of the ITR 7 is in such a manner that uh, you, as soon as you receive any contribution, corpus donation or voluntary contribution, everything gets noted in that particular return. Once you note that particular amount, the system comes to know that the receipts with corpus donation is more than 5 crores. So therefore, this was also one of the confusion which led to filling up of 10 BB and instead of 10B. Uh, then there was this problem where you had whether applied any part of its income outside India during the previous year. Here also there were cases where if I paid salary, say for to a teacher abroad for taking lectures for students in India, so there were certain topics where certain institutes or charitable institutes running courses were employing certain teachers abroad to give an online lecture to their students. These guys were being paid amounts outside India. Can you say that this particular amount is applied or any part of its income is applied outside India? According to me, no. But department in system does take a view that this would be applied outside India, and therefore there was this confusion. Now, this particular issue has still not been clarified whether this is applied outside India, and therefore it would be difficult to really decide at this point of time whether you should form file 10B or 10BB, and the clarification is still not there. Uh, the f- uh, the auditors had filed the forms based on their understanding of the law at that point of time, because it was in February end that the form was notified. You were supposed to file it by 30th September, which was extended to 31st October. So therefore, and the fact that majority of these trusts, charitable trusts, do not have a full-time accountant. They generally have a part-time accountant, and the life of the auditor becomes miserable because the details are just not available and are to be sometimes created by the auditor itself. Uh, Besides that, you also had to educate the trust that you need to maintain new registers, and therefore this confusion had led to cases where there were uh, forms to be filled up which were incorrect. Audit forms were filled up which were incorrect. Uh, the 1023 Proviso 10 also had this clause where you were supposed to maintain books of accounts and audit the accounts, the maximum amount not chargeable to tax in any previous year. So this was the clause. This is just for information. Proviso 10. 1023C has more than around 12 provisos. There are explanations. The section is practically bigger than any section which you can put up, and therefore one needs to. It's very difficult to keep track of. There's a provisos. Provisos have explanations. In that explanations, there are subclauses, and therefore. I had to take out specifically this clause to find out under 1023 where is this audit provision. So just for the purpose of presentation. Circular 2 dated 5th March 24. Now, what had happened is there were notices issued by CPC Bangalore to various trusts pointing out that they had filed Form 10B instead of 10BB or vice versa. And hence there is non-compliance and likely to be an adjustment. So therefore, trust had filled up 10B. In certain cases, due to sheer ignorance that there were existed a form of number 10BB, they were filing 10B in the old regime, and therefore they filled up 10B in the new regime. Similarly, they were Form 10BB filed without finding out that there is a 10B which is now notified for institutions under 1023C, and hence there was non-compliance. 143(1)(a) was received by all these trusts. Uh, the error in filing these forms in certain cases was a misunderstanding of the provisions or complete ignorance. So I've pointed out where the ignorance was. However, the difficulty was that there was this confusion about this interest on FCRA. Then there was this confusion about receipts of foreign contributions. So we had a trust where there was no registration of the FCRA. However, the trust had received foreign contribution from an from a donor who was a US citizen. Now, this was identified because that particular amount had come in dollars, and when we try to cross-check whether that person is resident or non-resident, it was found out that she had a US passport. Uh, they didn't have a registration. We went for compounding under the FCRA Act. However, for us, we had to fill up 10B instead of 10BB. Now, we had received a notice even in this case where there was a foreign contribution receipt because the FCRA number was not filled up in the return. So the system would pick up an FCRA number and compare your 10B or 10BB. Now, since we had filled up a 10B, whereas we had not filled up an FCRA number, a notice was issued. We did reply to that, but this return was not processed, is still not processed as of today. Similarly, there are certain dormant accounts in FCRA. So what happens is your FCRA is cancelled. The account has become dormant. You cannot withdraw money. However, since the account is a saving account, the interest keeps on accruing in that account till you rectify, pay the penalty, and you are allowed to withdraw the re-registered FCRA, and you are allowed to withdraw that account gets blocked, but you keep receiving that interest. Now that dormant account it will lead to a situation where you receive it will be treated as an FCRA contribution received, and therefore some of the auditors had filled up 10B in as an abandoned caution. Uh, I need to point out that 10B is a far detailed form compared to form 10BB, and it contains all the details what 10BB would require. So in one of the cases where the chartered accountant had filled up a 10B instead of 10BB, we had actually given a reply that all the details are there and it is an inadvertent error, and we did file the 10BB thereafter belatedly. However, that return was also not processed. So all these returns were really not processed because processing them would create a huge demand for the trust, which would go into litigation, and no purpose would get served. These so these are some of the examples which I gave you, which I think I've already discussed, and some trust return that 10B contains all details. Yeah, so the trust had filed form 10BB late after it's completed the term. So all this is discussed. Let's go ahead. We have only 1 hour. Yeah. So circular 2 has para number 7, which points out the error which is there. Uh, Non-filing of report would lead to denial of section 11. They point out that 10B is filed instead of 10BB, or 10BB is filed instead of 10B. And they say that this being the first year, uh, you are allowed to fill up a revised form by 31st March 24. However, one has to be clear that this particular benefit is only to those trusts which have filed their audit report before 31st October 2023. Now, if you have not filed it within time, you do not get benefit because you file it before 31st March. You will have to go for condonation to the principal commissioner under 119 subclause 2. So therefore, this is not for people who did not file their audit report before 31st March 2023. In cases where there were notices received and you had already filed the form before the circular, in that case, I had recommended to various chartered accountants that you should go for condonation as you have filed the wrong form. They filed the condonation. In those cases, they need not file the form again. The form is already there. The condonation may be withdrawn after the processing is done. Do not withdraw the condonation at this stage. After the processing is done, you may withdraw the condonation in cases where you've already filed it. Uh, this is only for trust. Yeah. So it is only for trust we have filed in time. The form has to be filed before 31st March 24 for getting benefit under Section 11. This is an advantage. So it is possible that in your case, the form is not the correct form and you have not received the notice. So this is an opportunity given to you to look at all charitable trust return audit reports filed and check whether you filed the correct form or not. If you've not filed the form correctly and you have not received the notice and it misses out, uh, the trust will lose Section 11 exemption. So it is in our interest that we go and look at each and every form and see that we've filed the correct form, check it again, because this is an opportunity given by the government so that we do it. Now, the cases where notice, one more important thing is that the auditor needs to be more cautious. Now, this way being the first year, no real action is taken by the government. However, filing the wrong audit report as an auditor in a mechanical manner without looking at the amendments would lead to disciplinary actions. And one, as an auditor, we need to be more careful. We have the constant pressure of the government. Taking disciplinary action against us. So therefore, one has to be cautious. This is a opportunity given because this was the first year by the government, and creating demands of this nature in the first year where there was confusion wouldn't have solved any problems. Therefore, this opportunity is given. One should take this opportunity. However, I have a gut feeling that in spite of filing the correct form, the processing of return could get affected because the return would have the old details about the form 10B or 10BB. So therefore, the corrected form corrected details of the form will not be there. Hopefully, they will come up with some solution to process it without creating a demand in such cases. Uh, I have completed sorry, circular number 2. Before I go to circular number 3, I'll just take the questions if any. So there is one Rahul Jaju who said that please guide if temple trust have ample agricultural income received, land given on a contract in addition to temple donation. Two question whether it is property income or any other head. So it is property income. So any activity conducted by the trust would be treated as income from property, and it should be shown. uh, is it necessary to utilize 80% of the same year? Yes, 85% has to be utilized. Uh, you have to look at section 11, subclause 7, which says that if you are registered as a 12A trust, you do not get any section 10 exemption. So therefore, you are covered by 11 to 13, and you're not covered by section 10 exemption. Can we amend clerical mistakes in appropriate form 10B filed, which came to notice and filing of the return of charitable entity will circular be helpful? No. So if you have made certain mistakes in filing 10B, uh, I don't. You could have filed a revised form immediately. The correct thing is to do is to file the revised form even today. However, circular 2 will not be helpful. Circular 2 is only where you have filed the wrong form. But if there is a mistake which you have identified later on, Kishorji, you can rectify it. In one of our cases where there was an error which was found out in the calculation, we had immediately within 2 days amended the form 10B. And we had written specifically where they ask you why is it being done, that there was this error which is there. So it is better that you rectify it. 10B will not help, but coming out clean at any stage is better than waiting for them to come up with the mistake. Can you please display the slide 2 condition 2 again? Uh, One sec. The slides will be circulated. So Deepak bhai, this will be circulated. Yeah. So Deepak bhai
Yes, we
will.
will circulate it.
Yeah,
Yes,
yeah. So I'll
yes.
not waste my time on that. Is
Sure.
registration under Darpan for charitable trust is compulsory now. No, it's not compulsory. If you are taking government grants, they require that you register with the Darpan charitable Darpan portal. Otherwise, there are a lot of trusts who have not registered. I don't. There is no compulsion to register on it. Government recommends that you do it. What is the main difference between registration under 1023C and Section 12? Both are parallel. There is no difference over there. The same conditions apply. Uh, 1023 is specific for education, medical, and such specific subjects. And Section 12 has a general public utility criteria. That's the difference. But otherwise, all provisions are made parallel by the amendments over the years. Trust filed the Form 10B even though its annual income was less than 5 crores, uh, and no amount were received from foreign contribution. Yeah, so there is an error. As per the ICA guidance note, in such cases, 10B is to be filed since interest on FCRA account is income to be reported in FCRA. However, the trust has received notice under that it should be filed, should have been. So I would recommend that so in this cases where there is interest, you must not have shown the FCRA receipts in the FCRA column. So what happens is the system compares the interest must have been shown with other interest and not shown separately as an FCRA receipt. Had you shown the return under FCRA receipt, Siddharth, you would not have got this notice. Now you cannot amend the return as of now. I would suggest that though it is not correct, but the practical way out is you have got an opportunity, fill up 10 BB and just complete the processing of that trust. There is other view possible. This is just my view about this, Siddharth. You have not filled up the return properly. Had you filled up the return by showing FCRA receipts under the FCRA receipts and not as interest, this notice would not have been received. Can we correct the mistake happened in 10B and Form 10B, which is not matching with ITR 7? This is not opportunity to rectify, as I've already said. You should rectify the mistake if it is there voluntarily, but this circular does not help. Condonation to be filed physically or online? No, it is to be filed online. What does the total income should be, gross receipts or not, or net income? It should be gross receipts. No expenses are to be set off. So it does not become clear when you read provisions of 12A. It is clear when you read the provisions of 1023C, the proviso. That is the reason I presented in the in my presentation that 1023, which is similar to your 12A. There they mentioned that the particular is to be the exemption under it is without exemption under section 11 and without expenses. So it is to be gross receipts and not the net receipts. What are the consequences of not filing or incorrect form filing? 10B or 10BB. I've already covered that you will lose section 11 exemption. In case audit report is revised, how it's detailed will be filed in ITR before revised AR. So if you have revised the audit report, I'm sure it will not get picked up in the ITR. So if there is an error, one will have to take the 154 route if they don't process it with the new, they do not take into consideration the new audit report filed. We have received a notice and filed correct form and not filed for condonation. Is there a need to resubmit before March 31st? I don't think there's a need to resubmit. Your form has already been submitted. Condonation was something which we were suggesting so that Section 11 is not this thing. If you have not filed it, don't worry. This opportunity is given by the government to avoid disallowance. Form 10B will be filed belated today and also ITR. No, so 10 ITR is not to be, you cannot revise the ITR. Only the 10B or 10BB, the correct form has to be filed. You cannot revise the ITR. Uh, uh, Sir, there is one case where auditor inadvertently missed the filing of audit report form 10BB, and due to which CPC has made disallowance. So can I file the audit report? No. So if you have not filed the audit report in time, you need to file the audit report now. Go for condonation. This circular will not help you. You can file the audit report, take an affidavit from the auditor that he had missed out of inadvertent, and or by the trustees that it was missed out or inadvertently, and approach the principal CIT to condone the delay. This was the first year. I'm sure he'll condone it. But this circular does not help you, Dimple. Uh, what is the difference between Form 9A and Form 10 for income accumulation? Form 9A, it's not the part of the syllabus, but Form 9A is for 1 year accumulation, so you've not received the money or this thing. Form 10 is for accumulation for over a period of 5 years. Uh, Ketan Acharya Trust did not file return assessment year 18-19, assuming that their turnover is less than 1 crore. And presume that trust is covered under 1023C, the ex parte order received charging heavily. Can trust get registered now? And so I didn't understand. It's a fact specific. Ketan Acharya, you can message me personally after this thing. I'll reply to this. This is not something which can. It's a fact. I'll spend a lot of time on doing this. So I'll take it off after the lecture. Uh, Sanmukh, this thing. Sir, can you please say under which portal government grant institution should be registered? Is it a company? I didn't get the question. Uh, uh, we can take this offline because I need to complete the presentation. ATG renewal application filed on 30th September 2023, while previous approval was up to 23-24. New now renewal application is rejected due to belated filing of application. No, there was an extension to that you could file the application up to 30th September. You can look at the circular. ATG renewal application, if you have filed, uh, uh, kindly suggest the remedy available. This is something not related to the topic for the current day. I'll take it offline. Venkatesh, you can message me. I'll reply to this. Not an issue. What is the total income? Is it the computation as per 5 heads of income without giving effect to Section 11? There is no, the heads of income do not apply to a charitable trust. You need to compute the income as per your normal accounting norms, and the total receipts are to be taken without expenditure. There is no question of 5 heads of income. 5 heads of income do not apply to charitable trust. FCRA registered, but no FCRA contribution during the year. Also no interest. Whether 10B or 10BB to be filed, according to me, if it is less than 5 crores, 10BB is applicable. You have not received any foreign contribution. Then you have Ketan Parekh. What is the income level amount to be considered for audit for income chargeable to tax? So it is 2,50,000. If it is receipts is more than 2,50,000, you need to get the audit done. Sir, your voice is breaking. Uh, is my voice breaking? You want me to change my this thing?
No, Ashok, I think it's okay. Maybe some.
Yeah, so there are a few more questions, but if I keep answering questions, I'll not be able to finish my presentation, which is more important for the circular 3. I'll take up circular 3. We'll take it at the end of the lecture. Is it okay, Deepak?
Yeah, we can
Yeah,
take the questions at the end. Yeah.
yeah, yeah. So, yeah, application of fund is one of the conditions for claiming Section 11 exemption. So you are supposed to apply 85% of your income during the year of receipt. If you do not apply the amount, then the accumulation is allowed only up to 15% of the total receipts without corpus donation. Corpus donations are not to be included in this calculation. The section provides the exemption in certain cases. So there are two exemptions provided. One in 11, explanation to where you have not received the income, or due to any reason you are not able to spend the income. So if you have received it on the month of March, you are not able to spend, then it's a simple thing. You fill up Form 9A online. Once you fill up the Form 9A, you can carry it forward to the next year, or in the year of receipt, you will have to spend that amount. So the exemption is given for this sort of receipts which are either not received on an accrual basis, and if you have received it, but you've received it, you are due to any reason you are not able to spend it, you can extend it for 1 year. The section also provides for accumulation for a period of 5 years for a project. You need to pass a resolution of the trust and you need to fill up Form 10, giving the details of the project which you want to spend the money for over the next 5 years. If you spend it within 5 years, you will get the exemption. If you don't spend it within 5 years, it'll be taxable in the fifth year. However, when you accumulate for a period of 5 years, you cannot donate to another trust. You will have to spend it yourself. So there cannot be donation to a third trust after accumulation under 11(2). Uh, Now, there was an amendment brought. The main cause of the amendment brought, which was the report of CAG in 2022, report number 12, where it was pointed out that there were four trusts which were misusing the provisions of use 15% accumulation. What had happened is there was 203.29 crores received by one trust. There were four trusts created, and each trust would transfer 85% of the income to the next trust. That trust would further donate it to the next trust, and the amount actually spent was only 164 crores. So this was pointed out by CAC, and when the CAC brought it to the commissioner's notice, commissioner said it was as per law and he could not help in this. They cannot be taxed. So therefore, the report suggested that appropriate amendment should be done to the law. The government was very quick. Uh, 22, the report was done, and in February 2023, the government immediately brought an amendment. The amendment was brought in explanation for, where they say that if you so the way of application of income is two: either you use it yourself or you give it to a trust having similar objects. When you give it to a trust which is having similar objects, uh, in that case, that is also application. The restriction was put in explanation for that when you donate it to some other trust having similar objects for a project, the donation will be treated as only 85% application. So if you have donated 100 rupees to a trust, only 85 rupees will be treated as an application. This was applicable from assessment year 24-25. So there is a current assessment here. Now this amendment led to a huge hue and cry. So there are a lot of trust where the trust is operated, say, in a small way. I do not have the wherewithal to create a hospital or a place where I can treat kidney patients who have to go for dialysis. So what I do is I go to a dialysis center and I tell the dialysis guy that I want to sponsor 100 patients, and I give money for that 100 patients free of cost, which are deserving. Now, this is a very common way of operations for all medical needs. So you, even if you go to Nair Hospital, has a social service wing where there is a where the patients who do not have money, their names are listed, and there are trusts which go to them and say that we are ready to donate for a needy person. So this was affecting all those trusts in a big manner. The amendment was brought both in explanation 4 under section 11(1) and also under clause 3 of explanation 2 of the third provision of 1023C, where they said that the donation given to other trust, the application will be treated as only 85%. A lot of representations were made. The issue with the amendment was that I'll give you an example. The example is in the third pointer. You had received, say, a trust had received 10 lakh rupees. It donated, the trust donated to another trust who was carrying similar projects and had the wherewithal 5 lakh rupees. Now, when they donated 5 lakh rupees, further the trust spent 3 lakh 50,000 out of the remaining 5 lakh rupees which was available. 1 lakh 50,000 was unspent. If you look at the total amount of receipts, 10 lakhs, 15% is 1 lakh 50,000. However, because of this amendment, look at what was happening. What was happening was only 85% of 5 lakhs, that is 4 lakh 25,000, was being treated as application. If you minus 3 lakh 50,000 further and the 15% where 75,000 was becoming taxable, you could not accumulate 75,000 because you don't have the funds. You have already spent that fund. If you want to show accumulation in your books account, you should have the funds for accumulation. And therefore, this 75,000 was getting taxed at 30% under 115 double BI, which is a new section from assessment year 20 to 23. So this violation, this section was leading to taxation of 15%, which was given to other trusts as donation. Now, this was becoming very difficult because there were a lot of trusts which was only operating through giving the money to. So if I want to do medical activity, I possibly cannot have a hospital in 10 lakhs or 15 lakhs or 5 crores or 10 crores. I require in a place like Bombay, I'll require more than 100 crores to actually set up a hospital of some means. So therefore, a lot of these smaller trusts were getting affected. A lot of representations were made to the government. However, government is unwilling to move back on the said amendment, as it was an anti-abuse measure. The amendment would create a lot of difficulty for smaller trusts because they will have to land up paying taxes, and this tax would go towards reduction of the amount which I could have spent for a needy person. Uh, uh, in certain cases, trust would have to change the way it was operating. So, supposing I'll explain to you through an example. So, you have an trust ABC, which the example of which I gave you for Nair Hospital. So, this is actually a practical experience with our organization where we there's a trust called ABC, which was giving regularly money to XYZ, which this is the social service wing of a Nair Hospital. That social service wing would generally come to you with a list of patients who require every month need for operations and medicines. ABC Trust has limited resources. Whatever funds it has, it donates to through this particular XYZ organization. A list is given. However, ABC has limited resources and therefore it cannot give the entire amount needed for the treatment of those patients. Therefore, the NGO which is operating in Nair Hospital would go to more than one trust. They have a list of trusts. So two or three trusts would get to, or four trusts would get together, pay their amounts which they have, give it to the NGO. NGO would issue a receipt and give a letter of work done after the operations and medicines are dispersed with photographs and the letter. And now with the amendment, what would happen is the amount given by ABC to XYZ, only 85% will be treated as donation for assessment year 24-25. Now, this will lead to a problem because I do not have the money to pay the taxes because I have donated that much money. Now, therefore, one of the ways in which we decided to operate was before the circular 3 was to tell ABC Trust to change the method of paying. So what they would do is they would either pay it to the patient who would pay the fees into the hospital, but this was difficult because they did not know the patients. The social service wing would know the patients, and therefore then it was decided that the social service wing would give them receipts of Nair Hospital directly paid by us. So we would give it to the Nair Hospital on behalf of the patients. They would issue the receipts. Now, Nair Hospital again was creating a problem because they said, I'll have to issue 5 or 6 receipts for each of the patients which you are talking about. Now, somehow we were able to convince them that the particular receipts are to be issued, and we had to change the method of doing the transaction. This created a lot of difficulty because we had to convince first Nair Hospital that they should issue so many receipts, plus the money which was being paid had to be paid directly to the Nair Hospital instead of those people, and that would have required more difficulty because one would the money had to pay just before the operation is done. So therefore, this was in certain cases the nature of transaction or the method of transactions had to be changed. This is one example of that. What does this circular tell you? Now, this circular tells you that the matter has been referred to us, and they have told the difficulty faced. They come out with a unique solution. What is the solution? It is reiterated that eligible donation of the trust or institution para two shall be treated as application of charitable religion only 85%. It means that now this meaning is very important. It means that a trust institution in either regime donates 100, either regime means 1023C or 12A, donates rupees 100 to another trust or institution in either regime, it will be considered as applied 85% for the purpose of charitable religious activity. It is clarified that rupees 15% or rupees 15 of such donation by the donor trust or institution shall not be required to be invested in a specified mode under 11.5 of the Act, as the entire amount of rupees 100 has been donated. to the other trust or institution and is accordingly eligible for exemption under the first or second regime. So basically what they are saying is that 15 rupees need not be accumulated. That is already deemed to be allowed. They then go ahead and give you an example. Now, I have broken those examples into two parts. Those examples are difficult to understand, but I'll just explain it to you. Basically, the circular says that 15% for which benefit of application is not provided, not to be considered for calculation in the trust return. So let me take up the first example. They say that the income is 300 rupees. Therefore, 85% of that is 255. So I'm supposed to apply 255 rupees. I have donated 100 rupees to another trust. So only 85 rupees will be considered as my donation, deemed application. After I uh, uh, take this, 85 is to be 255 minus 85, 170 is left. They say 300 minus 100, 200 is left. 85% of 200 is 170, and therefore the 30 rupees left has to be accumulated, which I have. Now, this is the circular understanding. Therefore, they say that you completely ignore that 15%. It is not to be taken into consideration, though there is a I will take only application of only 85%. Actually, as per the law, what was being propagated was I have 300 rupees. I have given donation of 100. 85 rupees is the deemed application. The balance 250 rupees I am supposed to apply. I do not have that 250 rupees. I apply only 170. 45 rupees is left. I have only 30 rupees for accumulation, and therefore 15 rupees were to be taxed at 30%. This was the law. They say today that you need not take that 15 rupees into consideration. You can minus from 300 total 200 and 100 rupees, though you are getting application of only 85. They further give you two further examples. These are the two other examples. So they say that you have 100 rupees of income. You are supposed to apply 85 rupees. You have donated that 100 rupees to a charitable trust. 85 is deemed application. And therefore, since you have, then there is no need for further accumulation. As per law, what was to be done was 100 rupees minus 85 deemed application, 15 rupees was left. I do not have the 15 rupees for to do accumulation of 15%, and therefore I will have to pay tax on 15 rupees. Now, this was the law which was passed with the intention to avoid the trust misusing this particular provisions. Similarly, Trust 3, where you do not donate to any charitable trust, you directly utilize 85 rupees, 15 rupees is left and you accumulate it. There, the law remains the same. Law and circular talks about the same thing. Now, this basically the trust too does not have rupees 15 to accumulate, and hence the said rupees 15 as per the provisions would have been taxable. The difficulty is being removed by the circular, is the circular as per law. So now the whole purpose of this circular was to uh, remove the mischief which was done by one trust donating to the other trust and that trust donating to a third trust, and effective utilization being zero. And therefore this circular seems to nullify the completely that particular clause. So today the circular is saying that you please ignore the law itself. Now this calculation is just a matter of operation. However, effectively it is saying that you do not need to follow that provision of law which is there in the act. Whether the circular can do this is something which I am not sure. But let me explain to you what was so amendment was with a specific purpose to avoid the trust taking benefit of 15% in manner that the effective application of fund is avoided. The CAG report specifically gave example of four trusts in interior Maharashtra. The intention was to curb this mischief being done by misuse of the provision of law. Thus, the mischief rule would apply, and any interpretation which would negate the purpose of the amendment would be avoided. Circular seems to suggest complete reversal of the amendment. Can a circular be issued in violation of the law? So you have to understand that it is not that this law came in 23. They had opportunity in section in Finance Act 24 when they gave a note on budget recently. They did not bother to change that in spite of the difficulty placed. This is the example which the CAG was talking about. Now, I'll take 5 minutes. Deepak, bhai, I'll just extend 5 more minutes. Is it okay?
Yeah, no problem. You
Yeah,
can
yeah,
please.
yeah. So trust one, you have 200, say these are in crores, so you receive 200 crores. You don't, application has to be made of 170, 85% if you want an exemption under section 11. What you do is you donate the entire 170 to the trust two. Now the circular says even if you 85% of 170 is 144, 150, 144.50. So the circular says that ignore this. You get a deduction of full 170, and you will have to balance is 30 rupees. You accumulate 30 rupees. That is all. 30, 15% is already donated, and therefore you need not bother about the amendment. Now the law says that 200, 170 was to be donated. You gave it to another trust deemed as 144, 550. 85% of 170 is 144.50. If you minus 200 from 144.50, 55 rupees is left to be applied. You have only 30 rupees for accumulation, and therefore 25.50 was to be taxed according to the law. However, the circular says, please ignore this, you do it. This is the same example of four trust. This 170 donated to the trust 2 is taken as income over here by this trust. 85% is 144.50 of 170. They give a donation to trust 3. So if you look at 144.50 is given to trust 3. 85% of 144.50 is 122.83. The circular says that you ignore, you will get a deduction of 144.50, and therefore 25.50 is accumulated left, and which is to be accumulated. So therefore, this particular, the law required you to pay tax at 21.67 as per the amendment. This is to be ignored by the application. Similarly, this 144.50 is given to the third trust. 85% is again donated to the trust 4. Uh, as per the provision of the law, 104 is the application. Uh, you, the circular says ignore all that, continue with the 122.83, 21.67 is left, invest that, that is done. Whereas as per law, you were supposed to pay tax on 18.42. This 122.83 is given to the fourth trust. That trust again donates 85%. 88.75 is given to the fifth trust who actually spends that amount. And therefore, you have a situation where only 88.75 is applied out of 200 crores. This is what CAG was talking about. The circular says, please ignore everything which is amended in the law, and you continue as you wanted, as you were continuing. According to me, this is really not a correct proposition of law. If the amendment had to be reversed, you should have reversed amendment and brought in some other way of curbing this. The circular seems to suggest I need to incorporate the complete amendment to the law. According to me, this is really going to be impossible to defend if this is disputed by the officer, which I think they will. The impact of the circular effectively nullifies the impact of the amendment made by the Finance Act 23. It is to be noted that Parliament thereafter passed Act 24, which also did not bring any change in the provision. The CBDT now brings a circular which effectively reverses the provisions, which is to avoid misuse of law. I'm sorry to bring in order, which is a horrible judgment, but order, Ahmedabad Urban Development Supreme Court 143 Taxman 278 has been specifically provided that circulars which are against the law are not binding. So this is the analysis of circular given in para 123 of order, where they say circulars are binding upon department authorities if they advance proposition of within the framework of statutory provisions, accord with and are not at odds with the statute. If they are contrary to the plain words of the statute, they are not binding and are to be ignored by the tax department also. Now, this is what is specifically mentioned in the judgment of Supreme Court. I am aware of the view that there are judgments of other Supreme Court which say that 119 is a beneficial and benefit can be granted under the law, under Income Tax Act under 119, which is a specific provision of the law. However, Ahmedabad Urban Development has specifically considered 119. However, it has ignored certain Supreme Court judgments which are of a larger bench than the two-member bench, and therefore certain legal view is that this is obiter dicta, and this judgment with regard to circulars need not be followed. Uh, I agree with that view. However, this is going to be difficult. You are trying to remove difficulties, but creating difficulties in the form of litigation. So therefore, 119 of the Income Tax Act gives a specific circular. You can come out with a circular which is beneficial, which is not as per the Income Tax Act, but giving benefit to the assessees can be given under 119 as per my understanding of the law. Uh, However, this particular circular has gone to nullify the law which has made to curb mischief, which I don't think any court would agree to in the long run. But let us take the chance. How do you go about? What is the way forward? We should take the benefit of the circular which is being given. Uh, if there is a challenge created by the department, which I don't think because they have come out with a circular, but there could be a change of view. No penalty can be levied because you have a circular which is a benefied understanding of the circular, and therefore there cannot be any uh, penalty against us. Is interest leviable? According to me, that 12% interest is running. However, uh, one could approach the principal CIT saying that you a principal CIT for removal of interest or waiver of interest under the pretext that this was clearly something which CBDT had brought. I have not earned enough interest of that nature. And if you want to take interest also, you take only the interest which I have earned on those funds. So something of that nature can be put up. I don't think principal CIT would accept that, but that is one defense which you could have in such a difficult situation which the government has put us in. Uh, the government's ego has put us into a mess. They once they come out with a provision, there is a reluctance to reverse, even if it is a wrong amendment. Uh, Now they have given this circular. However, there is a new ITR notified on 1st March. Now, if you look at the new ITR notified in Schedule A of that ITR, uh, I've just gone taken the ITR. I've not gone through all. I've only gone through the Schedule A, which was affecting our today's lecture. So I've not come out with all the differences. But here in Schedule A talks about application of funds. Now, under application of funds, Schedule A, they have specifically in clause 1, they say donation given to other trust, and they write in the bracket, uh, give 100% of the amount. Then there is clause 1A added where which says that calculate 85% of such donation, which is in clause 1. So therefore, they are calculating that in the application. Now, will the utility which will process this return take into consideration the circular? Really, I don't know. So you could have situation where you'll have 143(1) in all these cases because you followed the circular, you've done different calculations. So therefore, the ITR which is notified by them and the circular do not match. So this was on 1st March, the circular is on 6th March. Uh, However, we live in difficult times. We need to find a way around this. And my suggestion would be that we take the benefit of the circular as it is given. Yeah, let's take up the questions if there are any about this. Yeah, Deepak bhai, I've finished my presentation for the day. Uh,
Yeah, if I mean, if it's okay with you, we can continue for 5 more minutes, and you can take important questions if it is
yeah,
unanswered in your presentation.
yeah, sure.
Yeah.
Uh, so Section 8 company having business transaction which is 12A registered. Will this transaction make it above objective to cancel registration? You cannot carry on business in the trust if it is not related to the activities. So it has to be affiliated with the activities of the trust. It should be an offshoot of the objects of the trust. Carrying on a random business in a Section 8 company, your 12A is likely to be rejected, cancelled. Sir, other sources of 56 to 10 does come under separate head of income. I did not understand. Charitable trusts which are registered under 12A do not have to follow heads of income. So I don't understand this question, Sanjeev. If you could raise your hand and explain me, I'll answer it. As per my understanding, after the application of 85% of income remaining, 15% of the income can be accumulated by the trust institution and is not taxed. However, this 15% accumulated income is not to be invested in the modes prescribed in 11.5, talks about investment. Yeah, I agree. The circular goes a step ahead. It says that the 15% is to be invested in modes specified in 11.5. So it goes a step ahead and tries to prescribe something which is not there in the law. So therefore, this circular to that extent is incorrect. I fully agree with you, Rahul Mishra. However, if you do invest in modes other than provided under 11.5, you have the risk of 13.1C, which is there. Have a look at 13.1C. So generally, that 15% is either in your bank account or in a mode which is not which is compliance with 11.5. If you've done it otherwise, the income therefrom can be treated will be taxed at 30%. Look at 115 BBI and section 13.1C, which will affect it. Uh, you cannot accumulate, Rahul Mishra, any income which is not available with you. So I cannot accumulate something which I don't have. So therefore, I have seen a lot of computations where the trust has actually out of 100 rupees spent 100 rupees completely. Still, the computation shows 15% accumulation and 85% spending. And then you say 100 rupees spent and say 15 rupees loss. That is not a correct position of law. You cannot accumulate something which you don't have. Uh, in this circular point 9 on table given on page 3 mentions that 15% of such accumulation must be invested as per syllabus. I've already answered that. Yeah, Ankit Gala, FCRA Act states that FCRA saving by interest is also foreign contribution. In my case, only SB interest FCRA, no foreign donation, whether 10B or 10BB. As I said, had you shown that interest as foreign contribution, the notice would not have received. If you shown the interest in your other interest in the return of income, you will have to file form 10B because you can't revise the return. They will issue a notice that 10BB should have been filed, not 10B, and therefore it is advisable that now you take a benefit of the circular and file 10BB. Sir, you are telling that about Darpan portal or something for institutions receiving government grants. The name of the portal is not heard clearly. Portal may be given, please. Yeah, so I'll message you. There's a Darpan portal. I'll send you a link. My office does that regularly. I'll send you a link to Deepak Bhai. They'll circulate the link if you want to do the Darpan registration. The SSE has submitted Form 10B instead of Form 10BB. Now, as per circular, the SSE can file 10BB on or before 31st March. Whether erroneously filed 10B can be withdrawn by the SSE or the auditor. Can you suggest the plan of action for this situation? In this situation, what you do is, see, you cannot withdraw any audit report online. You can file 10BB, generate a new UDIN, and you will not even be allowed to cancel the old UDIN. So that 10B UDIN and details will remain over there. You will not be allowed to withdraw that. The plan of action is to file the new form, generate a new UDIN, and file the return. And keep records saying that why you had filed that form, because institute has a right to question why you are filing to audit reports. So it is going to be difficult if you don't. So you can say that there was a misunderstanding and keep records to that effect. Where a trust filed Form 10 late, though it filed return and audit report within the time. Audit report reflects the 5 years time for utilization. What is the remedy available to the trust? You go for condonation under 119 to the principal commissioner so that the principal commissioner can condone the late filing of Form 10. There is a circular to that effect. You can check that. To avoid tax liability under 115 BBI, can the trust expand further for activities under section 11 by filing form 10 for additional amount? You can't file, you cannot accumulate if you don't have the money. So filing form 10 would not solve the problem. You don't have that money. If you don't have it, how do you, if you file form 10B, where will you get the investment? So you will have to put that investment in 11.5 if you file form 10. That is not possible, according to me. Sir, we have filed form 10B instead of 10BB. Now we rectified that. My doubt is that whether I have to withdraw the form 10B. No, you do not have to withdraw it. You can't withdraw it. What is the effect of amendment in circular amendment if circular is issued. What is the effect of amendment if yeah, so I already explained this. The circular seeks to nullify the complete amendment. Though circular has binding on the department, circular which is contrary to the law. I've already discussed it, Rama Kiriji. Uh, yeah, whether a registered trust can give donations to individual poor people. Yes, that is application of fund. That is not donation to other trust. Pradeep Goelji. Good morning, sir. Suppose trust one receives income of rupees 100 in year one. After 15% equivalent files form 9A for 85A to be spent in year two. In year two, out of 85, the trust if, directly makes charity of rupees 35 and 50 to other trust having similar objects for medical help to needy patients. In the above case, how the particular income will be considered considering notification 3. So notification 3 effectively is removing all the difficulties of 85%. You need not bother if you have given that 50 rupees for medical facilities, that will be allowed. The circular effectively says that the amendment is to be thrown out of the window. Whether a registered trust can give donations to individual poor people. If not, yes, you can give. It is that is not covered donation to other trust. You can give that donation. It is not covered by the amendment. 15% of total donation are exempt from levy to tax.
Sorry, it's
Yeah,
not
hello.
an object of the clause of the trust.
Yeah, sorry.
Now, the earlier question states that if not specified in the objects of the trust.
No, no, you cannot give a single rupee which is not for objects of the trust. Your
So that
registration will get cancelled. Sorry, I
yes.
didn't read the full question. If it is not for objects of the trust, you cannot spend a single rupee. So, as an auditor, please be careful. The trust is bound by the trust deed which they have. This is not trustees' own money to spend it like they want. It has to be spent as per the trust deed given. If it is not as per the objects of the trust, the you have far worse consequences, because your registration can be get cancelled because of that. Just look at the provisions of 12 A, I think 12 AB or 12A, where they say that the commissioner can take suo motu notice of that. You need to point it out in your audit report, and you will not get deduction for it for sure. 15% of total donations are exempted from levy of tax, and trust can use this reserve towards objects of the trust. So in the last, it's also invested. I didn't get it. 15% of total deduction are exempted from levy of tax, and trust can use the reserve towards the objects of the trust. So in last, it's also invested as per section 11.5. I didn't get this query, Anil Jadhav. If we could take it offline, there are a lot of questions. I need to close because I'm already 15 minutes over time. Can the
Yeah.
cir can the circular of intertrust donations be applied only in cases where entire income of the trust is donated? No, not necessarily. The circular seems to say that you need to ignore. So you are trying to read the circular to say that only when the entire income. I don't think that is a correct interpretation of the circular. Circular can also be used for part donations. Uh, the example itself talks about it. So if you look at the trust one, that example tells you that part of the donation is given. Then also that circular applies. So they've clarified in the circular itself, Pooja. Can a trust purchase land for inadequate consideration without attracting provisions of section 56 to 10? Yes, according to me, there are case laws also. The chapter does not apply. So I don't think if you say that I have bought it at a value below the value which is there as per 50C, in that case, that amount is invested in the land itself. So therefore, 56 to 10 would not apply. Net surplus less than 15%, which is includes donation to other trusts, any tax impact. So, Mr. RM Anthony, I've already discussed that the circular seems to give benefit, though it is against the law, according to me.
I think
Given it,
Ashok,
yeah, sorry, yeah, sorry,
yeah,
I'll just close it. There are a lot of questions. I'll
yeah,
not.
yeah. That's a yeah.
Yeah, it's
Uh,
an endless list of questions.
yes, yes. So Thank you, Ashok. Actually, just a hindsight, you were saying that whether 1 year would be more or not. But considering all these questions and the way you explained this, I think 1 hour was too short. And thank you for the excellent presentation. And just one clarification, I don't know, just why in circular 2 they are saying order under section 119 and circular 3 says only order under one section 119 and 3 says circular under 119.
I don't, I have not applied myself to tell you frankly. So,
Acha, okay.
so
Fine.
I'll just
No, no,
think
the
about.
just this
Yeah, so
inquisitiveness was there.
order, yeah, so order under 119 and the circular under 119, according to me, is the same.
Yeah,
I think they've used a different term. I
terms, yes.
will
Yeah,
look it up legally. Yeah.
sure. Yeah.
Huh.
Thanks. So I would now request Visesh, convener of taxation committee, to propose a well-deserved vote of thanks.